Assalamu alaikum. This is lecture 29 of the Advanced Cost and Management Accounting. In the previous lecture, we at the end did a small exercise, and the exercise was making a statement and a different statement for traditional based system and the activity based system. And we saw how in our analysis of expenses, the traditional based system carried the expenses by their nature, and that meant the expenses were salaries, travel cost, occupancy, etc. And then we did the same budgeted and actual statement, and we looked at under the activity based system, that under the activity based system we were looking at expenses such as scheduling and such as rescheduling and reworking and things of that sort. So we were in the activity based system looking at activities, and the nature of expenses was in the form of activities and not just the nature of expenses. We had then looked at the actual versus the budgeted amounts, calculated the variances and shown a statement. In this session at the start, we are going to continue from that example, and we are going to carry on and see as a part B of that example how we are going to calculate unit cost based on the activity based system. This question is going to now provide you with additional information on the activities and the cost of the activities, and you will be required to arrive at an overhead cost and therefore an overhead and per unit cost statement for under activity based. We are also going to use in this example the concept of life cycle costing. And you will recall we have said that life cycle is looking at the product from the start when you initially introduce it, launch it in the market, the launch stage. It then comes into the growth stage, it then goes into the maturity stage, and then the decline stage. So from the start to the end of the product, it is based on estimates and market research and market evaluations, how the management expects that this product is going to, how long is it going to last in the market, what is potentially the total output of this product, the total production from start to end, and therefore we can look at the costs, especially the initial setup and research type costs over the product's life, and see whether over the life how the initial costs are absorbed and how profitable the product is going to be. This is basically life cycle product costing. We are going to use this concept in some of the example part of the example that we are just going to solve. So this will give some practice and also some detail of how questions can be framed in an examination and how answers should be planned and put together. What type of working that needs to be done, especially when you look at activity based, and together with that when you combine it with the life cycle costing. Part B of that same example now says, other activities have been identified and the budget quantified for the 3 months ended 31st March 20X1 is as follows. Now we give a list of activities together with their cost driver and the units expected and the cost of those units. So for the product design activity, the cost driver is number of hours. This will be design hours. The units are 8,000. So 8,000 hours, and they are going to cost 2 million. Purchasing activity, the cost driver is purchase orders. Units are 4,000 and the cost is 200,000. So 4,000 purchase orders expected to cost 200,000. The activity of production, here the cost driver is the machine hours. We expect 12,000 machine hours, and they will cost 1,500,000, so 1.5 million. And in this 1.5 million is included depreciation provision of 300,000, of which 8,000 applies to 3 months for the new product NPD. So there is a new product, we are going to call it NPD, and the depreciation related to NPD for 3 months is 8,000. Packing, the cost driver is volume, and units are 20,000 cubic meters, and the cost is 400,000. Distribution, cost driver is weight in kilograms, and the units are 120,000 kilograms, cost will be 600,000. So this is the detail of the activity, the cost driver, the units, and the estimated cost. This has been quantified for the 3 months ended 31st March 20X1. Now we have a statement, and this statement contains activities, and if you remember, activities then are measured by their cost drivers, and the total cost has been shown. So we have the activity, we have the cost driver that we expect is, remember, cost driver is that aspect or that which accumulates costs. The significant part and majority of the costs are being incurred because of the cost driver, and therefore the estimated cost is going to be based on the cost driver. We have seen, for example, that the product design is going to cost 2 million, and we have then identified that the cost of product design is closely related to the number of hours put in the design department. So the design hours are the cost driver, and there are 8,000 hours, and we have a total estimated cost of 2 million, and so on for each activity. So we have the activity, the cost driver, and the total cost. This has been accumulated for 3 months up to March 2000X1. The new product, which is called NPD, is included in the above budget. The following additional information applies to NPD. Estimated output over life cycle, 5,000 over 4 years. So the output of NPD is going to be 5,000 units, and we expect that to occur over 4 years. Product design requirement, it requires 400 design hours. Output in quarter ended March 31 is 250 units. Equivalent batch size per purchase order. So this means that in one purchase order, we are going to order goods which will be required for producing 50 units of NPD. So equivalent batch size per purchase order is 50 units. Production time is 0.75 machine hour. Volume is 4 cubic meters. Weight is 3 kilograms. Requirement is that we have to prepare unit overhead cost for NPD using activity-based approach, which includes a share of life cycle costs. So here's an example for us to see how we are going to combine the activity-based costing and incorporate the concept of life cycle costing in it. So using life cycle concepts, we have to arrive at the unit cost of the NPD. This means that we are going to look at all the activities, we are going to look at all their costs. We have to therefore arrive at a per unit cost, and once we arrive at a per unit cost of each driver, then we can accumulate that and arrive at the per unit overhead cost of NPD altogether. So the requirement is that we are going to use activity-based approach and include a share of the life cycle cost to arrive at the unit overhead cost of NPD. The cost driver rates are as follows. Product design, the cost is 2 million. There are 8,000 hours. The cost is 250 per hour. In order to arrive at the unit cost of overheads, for NPD. NPD, our new product. In order to arrive at that, we are going to need the per unit cost of each activity. We have been given the total amount of activity, and we have been given the total cost of that activity. So recall that we go back, the way in which to arrive at per unit cost is to look at the cost driver rate. So the first thing we'll do is to estimate the cost driver rate for each activity. Remember, we are given the activity, we are given the cost driver, volume, and we are given the cost. So dividing the cost by the volume, we arrive at the cost driver rate. In this case, we saw that product design, the total cost is 2 million, and we were told there are 8,000 hours. So the per hour cost of product design is 250. Cost driver rate for product design is 250. Purchasing, the cost is 200,000, and there are 400 purchase orders. So the cost per order is rupees 50. Production, excluding the depreciation. So the total production cost was 1.5 million. We were told there is 300,000 depreciation provision included. So if we eliminate or deduct from the production cost the depreciation, we arrive at 1,200,000. And there are 12,000 hours. The cost driver for production was machine hours. We have 12,000 hours. The total cost is 1,200,000. Therefore, cost driver rate is rupees 100 per machine hour. For packing, the total cost was 400,000, and 20,000 is the volume. The volume is in cubic meters. We have total volume of 20,000, which is going to cost 400,000. So the cost driver rate for packing is rupees 20 per cubic meter. Distribution cost 600,000. Distribution cost driver was weight in kilograms. There are 120,000 kilograms. So the per kg cost of distribution is rupees 5. The first step, therefore, is to calculate the cost driver rate. In arriving at the per unit cost of the NPD, we have the product NPD. NPD is going to comprise of the activities of the organization. So if we have a cost driver for each activity and a rate for each cost driver, then we can use that rate and build the per unit cost of NPD. NPD is the name we have given to the new product. We want to, don't forget, in this question, we are trying to arrive at the unit overhead cost of NPD. The activity-based overhead cost per unit now is as follows. Product design, NPD is going to require 400 hours, and the rate per hour for design is 250. So that is going to cost 100,000. So design cost of NPD is 100,000. We are told that the total output over life cycle of NPD is 5,000 units. So we are going to divide 100,000 by 5,000 to get at the per unit cost of product design. So therefore, this is now 100,000 divided by 5,000, which gives 20 per unit as cost of product design over the life cycle of the product. We have used 5,000 units. That's the life cycle. Over life cycle, 5,000 units. The product design cost is 20. Purchasing, 5 purchase orders at 50 units per order, costing 250 for output of 250 units. So 250 is the cost of 250 units in this quarter. So the purchasing cost is rupees 1 per unit. Production, we said, is 0.75 machine hours. And the rate, machine hour rate, was 100. So per unit cost of production for NPD is 75. Depreciation, we were given 8,000 for the quarter for 4 years. And that divided by the life cycle output of 5,000 units, gives 25.6 as the depreciation per unit for NPD. Packing, we are given the volume 0.4 cubic meters and the rate is 20 per cubic meter, so that comes to 8. Distribution, 3 kgs at rupees 5 per kg is rupees 15. So the total cost per unit is 144.6. This shows the calculation of the per unit overhead of NPD, and we have used the concept of life cycle cost. So where costs were incurred, overheads were incurred, such as design and depreciation, we have taken them over the life cycle and included them in the cost of the other overheads to arrive at the complete overhead cost of NPD based on activity-based costing as well as including the life cycle cost. That was a combination of the two. This is a good example for students to understand and to be able to repeat and recalculate if the question so requires. Now we will move on to our next topic, and that is benchmarking. We are continuing to talk about cost management, and we have seen that there are various ways in which management tries to improve cost, they try to reduce cost, and at the same time retain product quality and customer satisfaction. Various techniques were discussed. Lastly, we discussed business process reengineering. We have earlier discussed value engineering, and we have discussed the concept of reverse engineering and so forth. Benchmarking is something that we need to understand now. What is referred to by benchmarking? Essentially, benchmarking is looking at some world standard. Don't forget, we have said that most producers these days are facing competition from producers globally because product availability is becoming easier, trade barriers are being reduced and removed in many cases. So manufacturers find themselves having to compete with producers and manufacturers all over the world. So benchmarking is trying to say that you establish what is the world standard, what is the best standard, and you try to accomplish that best standard in your processes and in your production, etc. So that you are now producing world standard qualities which can compete with all other manufacturers. So you benchmark your product with other products available, and therefore you try to set like a world standard. This is not only going to affect product quality, it is going to affect processes within the organization, and it is going to affect all other activities of the organization. To give you one example, one could benchmark the time it takes to finalize accounts and produce the results, operating results. Very often these results are reported to stock markets, etc. And so the benchmarking exercise can also be related to financial results and the time taken to produce the financial results and report them to the stock market. And the way this benchmarking would be done would be to see what the best companies in the world are doing and how long are they taking to report their results to the stock market. So you benchmark the production and the preparation of your accounts and results, and you try to achieve them in the same time as the best companies are doing for producing their results. And that's an example of benchmarking. And of course, there are many other examples of benchmarking, because processes are being these days continually improved computerization has changed the entire process of business, whether it is business transaction recording or whether it is business processes, engineering processes, production processes, all are controlled through computerization and logic programs, etc. So that has completely changed in a way the way businesses are managed and run. So computerization has more or less affected many aspects of managing and running businesses, including the transaction recording and including other controls, business controls, and so forth. Fairly large and complex type of integrated programs are now available. Enterprise resource planning systems, the ERP systems, which are linking all the activities within the organization through the computer and therefore generating reports and making data available, has become much faster, and a lot more detail and a lot more data is now accessible to management for making their decisions. This is again a part of improvement, and just to be able to have that detail of information available makes the decision making easier and more accurate. So where people are using ERP systems and things of that nature, that has therefore affected how organizations are run and how they are controlled and what information is now become available to management. This is an example of trying to benchmark. So what we are saying, benchmarking is essentially a way to set standards which are being used world over and which are regarded as best practices and best standards. So world best practices can be regarded as benchmarks for organizations to follow and to be able to achieve. We refer to the system of financial recording, the time it takes to produce the results. We refer to computer programs and ERPs, and you can see this in products as well. Products these days are being continually improved due to automation and advancement and technology, so much so that the products that we see for us, the major products of our export industry is textile. The quality of textile that has now become available even in our country is now meeting some of the best standards available anywhere in the world. So producers are now benchmarking their product and producing the quality of fabric and the quality of textile which could be available anywhere. And that you can probably see in your own personal experience, that the fabric, etc., that is available and being used here is a lot different to the fabric that was available, say, 15 or 20 years ago. All that has been brought about by benchmarking excellence, by improving quality, by bringing in automation and bringing in new technology. So whether we look at textile products or whether we look at leather products, all these products have been improved significantly, and the producers are in a way matching standards that have been set by other organizations of the world. So they are benchmarking. Once again, we refer to this concept of benchmarking. So the leather industry is trying to benchmark the product that is available now by them to the producers of best leather goods anywhere in the world. Similarly, with textile and other products. So we have products that are being produced at a quality which is the standard has been set by the international companies, international organizations. We can say, following world standards, and that can apply to all products and all aspects of business. Hence, we are going to say that benchmarking, in order to identify the best way of performing activities and best processes organizations are turning to benchmarking. This involves comparing key activities to world-class best practices. Benchmarking identifies an activity such as customer order processing that needs to be improved. It finds a non-rival organization considered to represent world-class best practice for this activity and studies how it performs the activity. The objective is to find out how activity can be improved and implement the improvements. So benchmarking is going to look at a similar product being produced by non-rival. That means we are going to look at not necessarily competitors. We are going to look at how the non-rival organizations are producing and are performing that activity. So in the case of initially we referred to the preparation of results for the stock exchange. We can look at, for example, if you are in the auto industry. The auto industry will look at, let's say, the food industry and say how quickly is the food industry or the fertilizer industry, how quickly are they producing their results and sending them to the stock market. And if they have processes and procedures aligned in such a way that they can very quickly close their accounts and produce their results, then those processes can be examined, and this organization can also try to follow and achieve the same processes and acquire the same kind of results. So the activity has to be seen how it is best being performed. Benchmarking is in a way looking at what is the best performance method and how others are achieving that best performance. And by looking at others, of course, you are saving time and you have the opportunity, you can say the advantage of others' experiences and learnings, and you can make use of that and adopt those practices and try to achieve the same result and the same high standards. The objective, we said, is to find out how the activity can be performed in the best manner and to implement those processes. Benchmarking is cost beneficial since an organization can save time and money avoiding mistakes that other companies have made. Overall aim is find and implement best practices. The best practices is the overall aim of benchmarking. Benchmarking is trying to drive you towards best practices and setting the standards, benchmarking your activities, production and other activities to arrive at and achieve best standards, world standards, and take advantage of others' experiences and others' learnings and try to implement those within your own systems. The next thing we are going to talk about is the just-in-time methodology or philosophy in production and manufacturing. The just-in-time technique, the just-in-time systems, as we call them, just-in-time systems that are used in the manufacturing processes. Essentially, this was something that has been adopted from the Japanese style of management. And I think it's very easy for us to try to understand what just-in-time means. Everything we try to do in our lives, we aim to do it in time or just in time to make sure it is accomplished. Now, a just-in-time system in manufacturing means you are going to organize the activities and production and purchasing and receiving and inspection, all those activities just in time according to your production schedule, and that is going to basically mean that you eliminate many processes that don't add value. You do them in time. If they don't add value, you eliminate processes. Chances are that you're also going to eliminate costs. and therefore you will be reducing cost and you will be improving and enhancing business profitability. To understand just in time, I'll give you one or two very simple examples from our everyday lives, just to understand the concept of what just in time is trying to do. If you visit a construction site and you examine the laying of the roof, you will find that all the different materials that go into the formation of the roof are being mixed together in a mixer, and that material is entered into the mixer. The mixer prepares the, you can say, concrete mix. This concrete mix is then flown straight to the level where the ceiling has to be set and the roofing has to be set, and that has to be immediately provided and continually provided at the time that the roofing is being laid. Once, and we all know this if we have any experience on construction sites, that once this process of laying the roof starts, then this must continue and the material must be provided at that time, in time, to make sure that the entire roofing can be laid out in one go. So therefore, it is critical that the material is available, that the mixer is available, that the labor is available. All of them come together and produce and provide that mix. The concrete mix is produced and provided continually for laying the entire roof. And all those involved in construction know this very well, that it is critical if you stop the process of laying a roof once it has started. It can result in costs and damages. And this is the concept we are trying to explain how just-in-time works. Construction was one example, that the material and the labor and the machinery was all made available at the time when production is needed. We can use this concept here. It is critical, in fact. It can result in heavy damages and losses if this process is stopped and somehow there is a gap in it and there is discontinuity. Even though normal production might not essentially require for production a continuous basis, but if we can apply this process into our other production processes, then we can eliminate, we will find a lot of cost and waste. And therefore, we are going to align our process in such a way that production continues and materials are received, but they are received on a time which avoids waste and other costs, as we'll see in a moment. This was one example. Another everyday example that I can give you for trying to understand just in time is the operation at a tandoor. For example, if you sometimes see how in the streets where they are baking roti in a tandoor, you can find and know that the person, the labor involved in this, is providing the material ready just in time for the person to use and place in the oven and make the roti immediately. So there is a concept of providing the material just in time to be placed in the tandoor or the oven. And the concept again we are trying to explain is that a process is continuing, and instead of storing material and receiving material and having large storage inventory on one end at the receiving side and on the other end at the production side you have large inventory, in order to avoid that we use the concept of just in time. So the just in time means material is received at the time when it is needed, it is used and produced and delivered in one go, and there is no need to produce in large batches and therefore receive in large batches and therefore hold large amounts of inventory at the end of the process. So just in time is, you can say, efficiency driven concept, cost reduction method, cost reduction concept, deriving mainly, as I said, from the Japanese style of management. It requires a lot of coordination. It requires others to be as keen and as accurate and as efficient as you are, and therefore a lot of effort needs to go in there, but it generates an overall atmosphere of continuous improvement. So just in time is basically an effort in trying to aim for continuous improvement and eliminate waste, where on the one hand we don't have large inventories and therefore large goods being received. That is going to save on space, on timing, on this cost of staff. And at the other end, the finished good products are also, they will need a lot of storage space if you have large inventories at the end of the process. Finished good inventory, if you have large amounts, they will need to be stored, and that is all cost, which does not add any value to the customer. Storage prior to production, storage after production, these are all costs which we say are non-value added costs. They don't add any value to the product or any value to the customer. So efficiency techniques and efficiency systems are going to try to eliminate all such costs. JIT seeks to achieve the following goals: elimination of non-value added activities, zero inventory, zero defects, batch size of 1. We'll look at in a moment what is meant by this batch size of 1. Zero breakdowns, 100% on-time delivery. Whether achieved or not, they set targets and create a climate of continuous improvement. The concept is talking about zero inventory. It is talking about zero defects and batch size of 1. Now, zero inventory is an excellent aim. Even though you don't achieve it, at least you are now geared up to maximize your efficiency. Zero inventory would mean goods come in, they go straight into the process, they are produced. As soon as they are produced, they are out, delivered into the market. So there is no need to hold inventory. That would be zero inventory. That is ideal, but it has been achieved. If you look at benchmarking, there are companies that achieve this. So efforts therefore need to be made by management of all organizations to try to achieve this zero inventory position, both for incoming and outgoing of goods. And you don't need any storage space, you don't need any staff, you don't need any large warehousing. This would be the zero inventory position. Zero defects, another, you can say, a benchmark, world practice, world best practice, zero defect. This means the production process, of course, it generally relates to the production process, but it will include the quality of material that comes in. So the material quantity, inspection, quality, all that has to occur and be arranged with the suppliers. If organizations are going to incur some extra cost and encourage the suppliers to carry out inspection before delivery and to ensure the quantities and quality is as per the requirement, then you are going to save a lot of your own cost, in receiving and inspecting and holding that inventory. So zero defect is going to include the quality of materials coming in. It is going to include your own process, that you eliminate errors and you eliminate breakdowns and failures in your own system. And you therefore are going to also end up reducing and saving a lot of cost and saving a lot of waste. All defect, of course, is all waste and it's all additional cost. No value can ever be added by defective products. So zero defect is the philosophy of JIT. And the batch size of 1. We'll look at batch size of 1 in a bit more detail, but it is related to this entire concept of zero inventory and zero defects. Technology and advanced systems and computerization has allowed business organizations to aim at zero defects and zero breakdowns. Breakdowns involve maintenance, they involve preventive maintenance, and they involve ongoing maintenance. So these are all the aims which the just-in-time philosophy is trying to inculcate in the organizations. Elimination of non-value-added activities. JIT is a philosophy of management dedicated to elimination of waste. Waste is anything that does not add value to the product. The lead time involved in manufacturing and selling a product consists of process time, inspection time, move time, and storage time. Of these, only process time actually adds value to the product. So we are saying just-in-time philosophy is about elimination of waste. And waste is looked at as something that does not add value. So the entire lead time is the time it takes when you receive material and you're able to complete your processing and deliver the final product. So this is the lead time. Now this includes receiving material, storing it, inspecting it, and then processing it into the final product and removing all defective products, ensuring good quality, and that's the end product, passing it on to the customer. Now in all this lead time, really the part that is adding value to the product is the process time. So anything that is unrelated to the process time, therefore, can be regarded as waste, and that should be eliminated. The target will be to eliminate all the processes that lead to non-value added time or wastage of time. So all this process of storage and inspection and ordering and all that needs to be looked at and needs to be re-engineered and rethought of so that this process can be eliminated. Goods of the required quality and the required quantity are received within the factory at the time when they are needed for production. This would be how the JIT system and the JIT management would aim to achieve. At the same time, when goods are going out of the factory, there would be no need to hold those goods. That is not going to add any value. So if there is a situation where you are holding on to finished goods and then it takes time for it to move on, placed in the market, then that time and that space is all going to be considered as waste, as it adds no value to the product. The JIT system, continuous improvement, continuous efficiency. Research has shown that process time is less than 10% of total lead time in many organizations. Therefore, 90% of lead time adds no value, and in JIT philosophy, related costs can be significantly reduced. This is an amazing statistic that we just looked at what lead time is from start to the end when you receive product and when you deliver product. 90% of the lead time in some organizations is non-process time, and only 10% is actually processing time. So therefore, the JIT manager will regard this as 90% waste of time, and therefore the opportunity to significantly reduce the cost and significantly reduce the time taken in the process. That's how JIT philosophy is trying to target and aim at continuous improvement. JIT system is a mechanism for reducing non-value added costs and long-run costs. The implementation of JIT production methods was considered to be one of the major factors of success of Japanese firms in international markets. The JIT approach involves a continuous commitment to the pursuit of excellence in all phases of manufacturing operations. The aims of JIT are to produce at the required quality, in the required quantity, and at the required time. Organizations need to follow a path of excellence, and JIT is one example and one way of following and achieving excellence. There was a time when mainly the Western-based manufacturers and producers were struggling to compete and manage the production in the costs in which the Japanese had done. So this led to many studies of the Japanese management system, and some of these practices are coming out of the Japanese management system. They have demonstrated their techniques successfully, and they have marketed their products at costs and at qualities which were at times very hard for others to match. So these are the techniques that have come out, and they have presented a line, a direction of excellence which can be targeted and which can be aimed at for all organizations of the world to follow. Batch size of 1. We have looked at this terminology earlier. Now, what is the meaning of batch size of 1? Setup time is the time required to adjust equipment and retool for different product. Long setup time makes production of small batches uneconomic. However, production in large batches leads to substantial throughput delays and creation of high inventory levels. JIT philosophy is to reduce setup time to 0 by investing in advanced manufacturing technologies. Some machine settings can be adjusted automatically. If setup time approaches 0, there is no advantage in producing in batches, and the optimal batch size can be 1. So the batch size of 1 is another concept that we need to understand. We mentioned this earlier, batch size of 1. The whole idea of producing in batches is that you need to set up machines and you need to adjust them to start the production of one type of product. And once that production is completed, and then you need now to change over to a different product, then the machines need readjustment, and the machines need different types of equipment, etc. And so there is a need to set up the machines once again and then try to produce the second different type of product. This is what was the reason for having production in batches, that one type of product, you put it all together, set up the machines, and all that product can be produced all together and then taken to the other end, and now you have received all this type of product and a different type of product. When I say a different type of product, we can think in terms of, let's say, fruit juices. If there's a process of fruit juice and there's one flavor, let's say orange juice is being produced, and then now you need to stop and produce apple juice, then perhaps the machines will need to be realigned, and perhaps different ingredients will have to be placed in, and all that is going to require some setup time. Perhaps there is going to be some cleaning activity and so forth, and so that is going to require a setup time for changing the production from the orange flavor to the apple flavor. Current advancements and current technology enables many times for the machines to adjust automatically. So the need for batches was to have one type of product, produce the required quantity, have it at the end, and then have a different product after the setup. JIT philosophy says that setup is a waste of time. It does not add value. So if by technology you can adjust the machines and through automation you can adjust the machines, then you do not need setup. And if you don't need setup, then you don't need batches. And therefore, every product can be regarded as a batch in itself, and that's what the batch size of 1 refers to, the batch size of 1. JIT purchasing arrangements. Delivery of materials immediately precedes their use. Frequent deliveries so stocks can be cut to a minimum. Suppliers to inspect material before delivery and guarantee quality. More business to fewer suppliers and placing longer-term purchase orders. Reduction in paperwork arising from blanket long-term orders to a few suppliers. So under JIT, the purchasing arrangements would be such that you are going to have fewer suppliers and you are going to have long-term contracts with them, and they are going to give you frequent deliveries so that you have at the time of your production need the product that is available. As we said, even the inspection and the quality kind of guarantees can be built in because you have long-term contracts with these suppliers and they have long-term business. So the just-in-time philosophy in purchasing would be to have goods available at the time of production, arrangement with suppliers, no need for holding large inventory, no need for having large inspection and all the costs that are related to it. So the cost efficiency, cost reduction, that's the philosophy of JIT. That's all for this session. Thank you very much.